Hi, guys, and welcome back to Blockspot's Blockchain Today, your favorite blockchain news podcast where we cover the good, bad, and the ugly of blockchain industry over the last week. This week's roller coaster podcast will host Open Wino, a company that is disrupting the wine industry with blockchain, Ernst& Young's new blockchain software called Nightfall, and new ways of earning cryptocurrency without having to invest or mine in them. So, something that could be very big in India in the upcoming political climate. So, let's start with how OpenVino is making it possible for you to earn while drinking wine. Now, this particular topic is very close to me as I'm a really big fan of wine in particular, and I'm just in love with its versatility, not only as a beverage but also as an investment. And that's exactly what OpenVino is going for. The goal of the Open Wino project is to create the world's first open source, transparent winery and wine backed cryptocurrency by exposing Costa flows, technical, and business practices to the world. Transparency is a key value for building sustainable, ethical, and profitable businesses, and it is an also important tool for small companies. The Open Wino project breaks down into the following areas. OpenVino wants to develop a new business model that other companies can reference and adapt. It is an altruistic experiment to create a new sustainable business model. They also wish to integrate open source technologies and cloud service development techniques. They have plans to launch their own security token or STO and create the world's first wine backed currency and trading platform. So, for those of you who know what an STO is, you can skip the next 20 or 30 seconds. For those of you who don't, a security token offering is similar to an ICO or initial coin offering, with the principal difference being that each token has an asset backing it. More popular STOs are seen in real estate with Harbor, where every token is backed by a piece of property existing in the real world and on the books of Harbor. So STOs are generally more secure than ICOs as they have hard assets to justify their price and also have elements of regulations that ICOs do not. Now back to OpenVino. So investing in OpenVino would be buying the digital version of a wine bottle, but that's not all. OpenVino also uses biotechnology and IoT to ensure the quality of the grapes that they grow, and they collect all of this information in real time on their core of all the core raw ingredients that they use, something that has a major impact on the taste and price of wine. They also plan to document end drinker opinions and circumstances. This requires a massive amount of time and effort on behalf of the customer. With the Open Wino project, they break ground by paying customers for their feedback. In exchange for the information they provide about the product, they pay them with actual shares in the company. Organic Costa Flows. The concept is when you drink it, you own it. And their biggest and best use of blockchain technology is their effort to incorporate the ultimate traceability tools. They plan to provide a public and transparent data set about each wine bottle, where the grapes are grown, in what conditions, what were the additives, how and where it was stored, as well as the traditional ingredients that were added. What's really great about this project is that while this is great for the wine industry in general, their simple model can be scaled and applied to all F&B segments. Well, I'm not talking about investing only because, unlike wine, the leftover pizza from last night in your fridge is not going to appreciate in value. However, the ability to trace all ingredients and processes used during the production would be immensely beneficial to all parties included. Investing into Open Wino will ensure that you are drinking wine from one of the most hygienic and hygiene focused wineries, and will also give you the ability to invest into the product for the long run. So you get to drink the wine and you get to sell it as well when it reaches its particular value or its potential value. This might be a little too late, but if you are a recovering alcoholic listening to the video, disregard everything I've said until now and let's move on from this awesome project to the next awesome project. So Ernst& Young last week has finally launched its highly anticipated Nightfall software on GitHub. Ever since we heard of this project on the Blockchain Global Summit back in April, we have been eagerly awaiting for the next giant to step into blockchain development, and the next Goliath through the door is EY. The value of specialization and trade, so elegantly explained by Adam Smith, is constrained by the cost and complexity of doing business with other people. The easier it is to work and coordinate activity with others, the larger a firm can become. Economic transaction costs are typically much lower within an enterprise than they are for working with external parties. Through as larger the firm gets, the harder it can become to coordinate between parts of the organization. Information technology has always had a role in cutting transaction costs. Telegraphs, phones, and finally computers made it possible for firms to operate at regional, national, and eventually global levels with remarkable degree of coordination. The advent and wide usage of ERP systems took that to a whole new level. Not only did ERP unify information across the enterprise, it unified processes as well. From procurement to hiring to shipping, the implementation of ERP brought with it the promise of global standardization. Before ERP, companies could try to negotiate volume purchase deals, but they were hard to enforce. After ERP, if your company had an exclusive shipping agreement with a single supplier, enforcement was often not, though not always, it was always mostly simpler. In some cases, attempts to print a shipping label with a non preferred shipping carrier simply wouldn't work. And while companies' business models have evolved to do far more outsourcing and partnering, the way they work with each other has digitally barely changed since the 1970s. Back then, the best in class method of communicating digitally with suppliers was a system called Electronic Data Interchange or EDIs. Basically, enterprise text messages with standardized formats. Contract, supply request, and shipment notices could be sent back and forth between companies, while main industry web portals emerged late in the 1990s and got huge amount of fundings. Most of them were largely disappointing because enterprise buyers never fully trusted them with mission critical transactions. So why has EY bought in blockchain into this particular segment, and they are trying to reinvent the EDI model? Everything that companies cannot do with EDIs and all the things that they want to do with web portals are possible with blockchain. Without the danger of handing over the strategic business information to a potential competitor. Using a public blockchain, enterprises can create products, trace their history, and enter into business agreements with other parties, all with shared rules. When an item is delivered from one point to another, everyone in the agreement can find out, and business rules can be applied consistently across a multi enterprise agreement. And instead of having to do this by joining a dozen different extra nets or networks, it can be done in a single shared blockchain. The results from widespread adoption of blockchains will be a value creation in every bit as a large firm as the first round of enterprise IT driven productivity gains. Now, spread even further across the economy. For enterprises, this will be a giant leap forward in how they work with each other. As simple as these things sound, managing business processes across enterprise boundaries is now the single largest activity in most companies and by far the most complex and costly. It has all the complexity of traditional enterprise work with virtually none of the automation that has fed into other parts of the enterprise over the last 40 years. And with large size and complexity comes the opportunity for enormous improvements. To keep things simple, I will cite just three of the biggest sources of ROI they have seen so far. The first is simply process cycle time. Working with Microsoft and applying blockchain technology to the software licensing processes on the Xbox network, they have been able to cut time needed to calculate payment amounts by more than 99% from 45 days down to just a few minutes. And they believe, working with Microsoft, that when fully developed, this system will be 40% less costly than the prior solution. In EY's own words, Nightfall is the second version of EY's privacy technology based ZKPs or zero knowledge proofs. They released the first in 2018 in October as a prototype, and though it was groundbreaking as the very first use of ZKP transfers on the public Ethereum mainnet, the early version was not very efficient. Transactions in our prototype cost about $100 in US in network power to execute so far for most users. Since then, they have worked hard to improve efficiency and they have reduced the cost to around 8 to 10 per transaction. EY has also has a second major platform called Blockchain Analyzer. While EY's Ops Chain is about doing business on blockchain, Analyzer is about tracking and managing and understanding those transactions. EY's Blockchain Analyzer is used by audit teams to conduct financial statement audits, but it can also be used by external clients for transaction monitoring and analytics. They're also deploying within the analyzer tools and calculations necessary to determine tax liabilities from business transactions done on blockchains. So you guys can see that EY is betting big on blockchain to enhance the value it brings to their clients, and we will now follow this space for you. And finally, let's move on to some ways you can earn crypto without having to invest or mine. Currently, the most well-known way for anyone to get their hands on some cryptocurrency is to buy it on a crypto exchange using dollars, euros, pounds, or through a process known as mining. Now, we are going to focus on the ways people can earn tokens without having a knowledge of mining or having any capital for investment. So let's start with the first one, and the first method is crowdholding. Crowdholding is a neat little platform that is aiming to create a vibrant, large community through co-creation and crowdsourcing. Startups put tasks on the platform and the user give feedback and earn tokens as a reward. These tasks vary from marketing, product testing, UI UX to many other sectors that a startup needs to get right to flourish. If you are not great at typing, they also have some airdrops and bounties on there as well. According to their website, they have over 90 startups on their platform with over 35,000 signups. The thing I like most about this platform is that each of the tasks is pinned not just with the startup tokens but also crowdholding's YUP, meaning that each task or bounty that you take part in, you can earn 2 tokens, minimizing the chance that the token will not be worth anything after the fundraising. Although the YUP value is pretty low right now, it's still listed on CoinMarketCap, and if they continue to grow, I believe that their token could become very valuable in the future. The second most popular method is through bounties and airdrops. Bounty campaigns are essentially an incentivized reward offered by startups to individuals. What this means is that a company introducing a product or a service offers a reward to people in exchange for performing certain tasks. In the cryptocurrency world, they have implemented bounty campaigns to ICOs as a useful marketing tool to raise awareness. Participants are paid in the token that they are promoting. There are a range of different tasks from sharing links on social media, writing articles, and signature campaigns on forums. For both parties, it's a win-win. The user takes part in small micro tasks and earns tokens, which can be worth something, and the ICO has the ability to reach their target audience without throwing down serious capital in marketing. Airdrops is when a blockchain project decides to distribute free tokens or coins to a community. In most cases, to be a recipient of an airdrop, the only requirement is that you have some coins from the relevant blockchain stored in your wallet and you have signed up to become part of their community. Why give away free tokens? Again, to raise awareness for the project. Now, there are a few websites that are bounty or airdrop platforms. In particular, there's Bounty OX, Bounty Hive, Airdrop Alert, and airdrops.io. And I would suggest before taking part in any bounty or airdrop, you check the project behind it. Remember that for you to receive your tokens and for them to become valuable, the ICO needs to be successful and the project needs to grow. The next way, I think, and most of you would find this really exciting, is blogging. Earning money through blogging isn't a new thing, as it has been for a while. Most bloggers make money through creating an audience and businesses wanting to market to that audience through ads, referral links, etc. In the crypto world, there are 2 great blogging platforms where you can get paid in crypto for making content and even upvoting other people's content. Steemit, that we've covered before, is a hybrid blogging social media platform that initializes blockchain technology and cryptocurrency to reward its users for creating content, commenting, and upvoting others' posts. The one downside to Steemit is that if you lose your password, you're not able to regain it, so I suggest that you store your password offline. Publish is a new system that has some similarities to Steemit, but there are a few other ways you can earn on this platform. There are 3 main ways to earn crypto on Publish: reading content, sharing, and writing. The beauty of blogging is that you can blog about anything you are passionate about. It doesn't even have to be about crypto. And finally, there's a traditional way of earning cryptos with a twist. Since the explosion of crypto industry, more and more startups are appearing, and like any other business, they need to grow. Working for a crypto company is a way to earn larger amounts of crypto, but I would suggest you do not get paid fully in crypto as the market is volatile. There are numerous crypto related job sites such as Crypto Jobs, Crypto Job List, angel.co, where you can just go ahead and use the keywords such as crypto, Bitcoin, or cryptocurrency. So you can see that there are tons of ways to earn crypto, and you can truly see why people call cryptos unstoppable. No matter what the Indian government does, it will be nearly impossible for them to prevent you from earning cryptos using these methods, and even more difficult for them to take your money away unless you move it back to fiat. So that's it for today, guys, and I hope that our podcast has created new and exciting ideas in your heads. If you like the video, then please subscribe and comment down below on what you would like to see covered in next week's episode. Thanks, guys, and see you next week. Bye.